Hello and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News EN channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Why is XRP price rising today? Key factors behind the surge. Franklin Templeton launches Bitcoin and Ethereum Index ETF amid growing institutional interest. Cardano, ADA, price surges amid governance milestone and DeFi growth. Strategy expands Bitcoin holdings with $2 billion convertible note offering. Bitcoin ETF inflows decline, but analysts see CME futures data as a potential reversal signal. Why is XRP price rising today? Key factors behind the surge. XRP has outperformed the broader crypto market, surging 5% in the last 24 hours to trade above $2.67. In comparison, the global crypto market capitalization has only increased 1.6% in the same period, reaching $3.23 trillion. The latest rally comes amid bullish developments in the regulatory landscape, particularly in Brazil and the United States. Brazil approves first spot XRP ETF. The primary catalyst behind XRP's price surge is the approval of the world's first spot XRP ETF by Brazil's securities regulator, the Comissão de Valores Mobiliários, CVM. Key details. On February 19, CVM greenlit Hashdex's Nasdaq XRP Index Fund, marking a major milestone in XRP adoption. The fund, called Hashdex Nasdaq XRP Fundodor Index, is currently in its pre-operational phase, with an official launch date yet to be announced. This ETF provides institutional and retail investors a regulated investment vehicle to gain exposure to XRP without the complexity of private key management or self-custody. Brazil, home to over 200 million people, has shown increasing interest in crypto investment products, making this approval a significant step for XRP's global adoption. Growing speculation on U.S. spot XRP ETF approval. Up north, the U.S. Securities and Exchange Commission, SEC, has received multiple spot XRP ETF applications from major asset managers, including CoinShares, Bitwise, 21 Shares, Grayscale. The odds of a U.S. spot XRP ETF approval on Polymarket have increased from 78% on February 17 to 80% at the time of writing. Additionally, the SEC acknowledged Grayscale's XRP ETF filing on February 13 and CBOE-BZX's request to list 21 Shares XRP ETF. According to Bloomberg ETF analysts James Seifert and Eric Balchuners, the likelihood of SEC approval for a spot XRP ETF in 2025 is 65%. XRP open interest jumps nearly 20%. XRP's latest rally has been fueled by increased interest among derivatives traders, suggesting a rise in speculative momentum. Key indicators. XRP's open interest, OI, has surged 18% in the past week, rising from $3.48 billion on February 13 to $4.11 billion on February 20. In the last 24 hours alone, OI has increased 6.7%, per data from CoinGlass. The funding rate for XRP futures has turned positive, 0.00 for 1%, indicating that more traders are betting on price increases rather than declines. These metrics indicate strong bullish sentiment, as traders continue leveraging their positions in anticipation of further price appreciation. Technical outlook: can XRP sustain its momentum? Currently, XRP has flipped the $2.70 level into support, with the 50-day simple moving average (SMA) acting as a base. To maintain bullish momentum, buyers need to push XRP past $2.80, preventing a potential sell-off. If bulls successfully reclaim $2.80, the next target could be a multi-year high above $3.40, representing a 26.5% gain from the current price. However, the Relative Strength Index, RSI, has slightly dropped from 54 to 51, signaling that a bull trap is possible. If XRP fails to hold above $2.55, it could trigger a decline toward the 100-day SMA at $2.30. Will XRP continue its rally or face a pullback? With Brazil's ETF approval and growing US regulatory speculation, will XRP maintain its momentum and break past $3.40, or will traders take profits and trigger a market correction? Franklin Templeton launches Bitcoin and Ethereum Index ETF amid growing institutional interest. Franklin Templeton has officially entered the cryptocurrency ETF space with the launch of its Franklin Crypto Index ETF, EZPZ, which provides exposure to both Bitcoin, BTC, and Ethereum, ETH. This move makes Franklin Templeton's ETF the second crypto index fund in the US market, following the debut of Hashdex's Nasdaq Crypto Index US ETF, NCIQ, on February 14. A new era for institutional crypto investment. The Franklin Crypto Index ETF is designed to offer institutional and retail investors a seamless way to gain exposure to the digital asset market without the complexities of direct ownership. Key details. Launched on February 20, the ETF is currently available on the CBOE BZX exchange. It tracks the USCF Institutional Digital Asset Index, which presently includes only Bitcoin and Ethereum. As of February 20, the fund's allocation is approximately 87% BTC and 13% ETH, according to CF benchmarks. Franklin Templeton has also signaled its intention to expand the ETF's holdings as more cryptocurrencies gain regulatory approval, aiming to provide a comprehensive crypto portfolio for U.S. investors. Institutional crypto adoption gains momentum. Franklin Templeton's ETF launch is part of a broader trend where institutional investors are increasingly entering the crypto space. Hashdex's NCIQ ETF, which launched earlier this month, currently follows a similar structure, holding only BTC and ETH but with plans to expand in the future. In October 2024, NYSE Arca applied to the SEC to list Grayscale's Digital Large Cap Fund, which includes BTC, ETH, SOL, and XRP among other digital assets. Shifting U.S. regulatory landscape under Trump's administration. The SEC's approval of multiple crypto ETFs comes amid a changing regulatory climate in the U.S. Since Donald Trump's re-election in November 2024, the administration has taken a more accommodating approach to cryptocurrency oversight. This shift has led to a surge in crypto ETF filings, with asset managers pushing for spot ETFs for Solana, SOL, XRP, Litecoin, LTC, and other altcoins. Market impact and future outlook. The approval of spot Bitcoin and Ethereum ETFs earlier this year was seen as a major milestone for crypto adoption. Now, with crypto index ETFs entering the market, investors are gaining more diversified investment options, which could pave the way for broader institutional adoption. Bloomberg Intelligence analysts predict a high likelihood of further crypto ETF approvals, signaling a bullish trend for digital assets. Could crypto index ETFs pave the way for a broader institutional adoption boom? Cardano, ADA, price surges amid governance milestone and DeFi growth. Cardano's ADA token has posted significant gains, rallying 4.4% in the last 24 hours and climbing above 79 cents as of February 20th. The cryptocurrency has bounced back from its February 18th low of 73 cents, gaining nearly 9% in 2 days. Key drivers behind ADA's price surge. Several fundamental factors are fueling ADA's price recovery, including the ratification of Cardano's new constitution, increased total value locked (TVL) in DeFi protocols, technical indicators signaling a potential rally beyond $3.50, Cardano's governance upgrade, a new era for ADA holders. A major catalyst behind ADA's price momentum is the ratification of the Cardano Constitution, which enhances the network's on-chain governance model. Key takeaways. In a February 19 live broadcast, Cardano founder Charles Hoskinson announced that the community had overwhelmingly approved the new constitution, replacing the interim version introduced in June 2024. The governance framework ensures that ADA holders have a direct role in shaping the network's future. The proposal received 85% approval, surpassing the required 75% threshold. The new Cardano Constitution will officially take effect on February 23. Hoskinson described the governance shift as transformative, stating, "That means Cardano is basically a government, a living thing. This upgrade is a crucial step toward a self-sustaining blockchain ecosystem, boosting investor confidence and attracting more developers and participants to the network." Cardano's DeFi sector sees a 22% surge in TVL. The total value locked, TVL, in Cardano's DeFi ecosystem has experienced significant growth, further strengthening investor sentiment. Cardano DeFi growth highlights. TVL has surged by 22.4% in just 8 days, climbing from $313.6 million to $383.7 million, according to Defilama. Leading protocols driving this increase include Splash Protocol, plus 125%, market-making liquidity provider. LenFi, plus 5%, lending platform. Indigo, plus 29%, decentralized synthetic asset platform. Daily transactions on the Cardano blockchain have also increased since February 8, reflecting rising network activity. This DeFi resurgence signals growing adoption and utilization of the Cardano ecosystem, reinforcing bullish momentum for ADA. ADA's V-shaped recovery and potential breakout. ADA's price action suggests the formation of a V-shaped recovery, a bullish technical pattern that could set the stage for a move toward $1.16 and beyond. Technical outlook. ADA is trading below a key supply zone between 90 cents and 98 cents, where the 50-day and 100-day simple moving averages, SMA, are converging. A successful breakout above this zone could propel ADA toward $1.16, completing the V-shaped pattern. If bullish momentum continues, the next major target is $1.33, marking a 48% upside from current levels. The Relative Strength Index, RSI, has risen from 25, oversold, to 46, indicating that bullish momentum is gaining strength. Can Cardano maintain its uptrend and break above $1.16 in the coming weeks? Strategy expands Bitcoin holdings with $2 billion convertible note offering. Strategy, formerly known as MicroStrategy, has announced a $2 billion senior convertible note offering to acquire more Bitcoin, BTC, and cover operational costs, continuing its aggressive investment strategy. This move is part of Strategy's 21-21 plan, which aims to raise $21 billion in debt and $21 billion in equity to fund BTC purchases. Key details of Strategy's convertible note offering. The $2 billion notes will mature on March 1, 2030 and carry a 0% coupon rate. Investors purchasing $1,000 blocks of the notes will have the option to convert them into 2.3072 shares of Strategy's Class A common stock at a 35% premium, currently priced at $433.43 per share. The conversion rate and price are subject to market conditions, meaning future fluctuations could affect investor returns. Qualified institutional investors will have the option to purchase an additional $300 million in notes within 5 business days after issuance. Strategy's Bitcoin accumulation, a high-stakes bet. The company has doubled down on its Bitcoin acquisition plan, earning both praise and criticism for its leveraged approach to building a BTC-backed corporate treasury. Notable Bitcoin holdings and financial performance. On February 10, Strategy acquired 7,633 BTC, increasing its total holdings to 478,740 BTC, valued at approximately $46.4 billion. The company's Bitcoin investment currently sits at an unrealized gain of over $15 billion, reflecting a 49% increase on its BTC purchases. 12 U.S. states collectively hold $330 million worth of Strategy stock, with California, Florida, Wisconsin, and North Carolina among the largest holders. Despite its record-breaking BTC accumulation, Strategy reported a $670 million net loss in Q4 for 2024, marking its most aggressive quarter of Bitcoin purchases. BlackRock backs Strategy's Bitcoin vision. Institutional investors have taken note of Strategy's Bitcoin-driven approach. BlackRock, the world's largest asset manager, increased its stake in Strategy to 5% after the company rebranded in early February 2025. Following BlackRock's move, Strategy's stock price surged by 2.8% on February 7, reinforcing confidence in its Bitcoin-centric strategy. Is Strategy's Bitcoin investment model sustainable in the long run? Bitcoin ETF inflows decline, but analysts see CME futures data as a potential reversal signal. Bitcoin, BTC, has seen a 4.4% rally after forming a new range at $93,321 on February 18. However, its high time frame, HTF, market structure continues to follow a descending channel pattern, lacking strong momentum. With BTC currently trading between $91,000 and $102,000, analysts suggest that low institutional demand and ETF inflow declines are contributing to its sluggish price action. Spot Bitcoin ETF inflows drop amid market uncertainty. Julio Moreno, head of research at CryptoQuant, pointed out that spot Bitcoin ETF inflows have dropped by nearly 50% in Q1 2025 compared to Q1 2024. The total net inflows for Q1 2025 stand at 41,000 BTC, compared to 100,000 BTC in Q1 2024. However, when measured in USD terms, the difference is much smaller, with ETF inflows totaling $4.3 billion in 2025 compared to $4.8 billion in 2024. This decline in ETF demand suggests a slowdown in institutional accumulation, despite Bitcoin trading near its all-time highs. CME Bitcoin futures show risk-averse sentiment. Vettel Lund, a research analyst at K33 Research, pointed out that the one-month basis of CME Bitcoin futures has fallen to levels last seen in September 2023, just before the start of Bitcoin's previous bull run. The one-month basis reflects the premium or discount of Bitcoin futures compared to spot prices. A positive one-month basis typically indicates bullish sentiment, while a negative basis suggests a bearish outlook. Although the current basis is still positive, Lund highlighted that market conditions are currently risk-averse, with low trading volumes, reduced ETF flows, and declining volatility. Interestingly, CME's annualized futures basis has also dropped to a 4-month low, a trend that has historically preceded BTC price reversals. Since March 2024, every time the annualized basis dropped to the 6% range, BTC formed a local bottom within 2 weeks. On February 19, the annualized basis stood at 6.22%, signaling that a potential rebound could be imminent. Bitcoin's price compression under $98,000, is a breakout coming? Despite its range-bound movement, Bitcoin has not closed below $92,000 since November 19, suggesting strong underlying support. Crypto trader Jackies noted that Bitcoin's volatility has compressed to levels similar to August 2023, indicating that a breakout is nearing. Investor Gel echoed similar sentiments, stating that BTC's price squeeze is getting tighter and tighter, and will likely result in a major move soon. Key levels to watch. A daily close above $98,000 could signal a bullish breakout and trigger higher volatility. Conversely, a break below $92,000 could extend BTC's downtrend, pushing prices toward the lower range of $91,000. Could Bitcoin's tight trading range be setting the stage for a major breakout?